Sunday night, Sunday night, Sunday night live. Sunday night, feather fly. Got my church shoes on and my tie real tight. Hey! Lights up, hosting a neon suit. Coffee in a paper cup, talking about the price of food. Tickers doing house stops, colors on the fever crawl. Every little candle doing jazz hands on the wall. Sunday night live, do the funky chicken. Shake that tray like a floor is slipping. Cut once, cut twice, hit by, then flip it. Sunday, Sunday, Sunday night live. Sunday night live. Do the funky chicken. Money gonna move when the tail starts kicking. Sunday night live. Sunday night live. Do the funky chicken. Call from Des Moines, should I sell my gas? Call from Miami, I'm stuck in cash. Phone's on fire, holster wiping sweat says, if you can't sleep, you ain't closed yet. Oh yeah! Sunday night live, to the funky chicken. Shake that tray line, yeah, like the floor is slipping. Cup push, cup price, hit by, then flip it. Sunday, Sunday, Sunday night live. Sunday night live, do the funky chicken. Clock now, money gonna rule when the tail starts kicking. Sunday night live. Sunday night live, do the funky chicken.
Good evening, all. Welcome to the live stream on Sunday night here. It's Sunday night. It's been quite a week. I'm sure you're all a bit shell-shocked from what's been going on recently in Iran and the Straits of Hormuz, and now on the island, Karg Island, and all sorts of stuff going on there. So it's going to affect oil, natural gas, and the markets in general. We've seen the markets have sold off, equity markets, and not so much Bitcoin, but equities, gold, silver, metals, etc. And oil and gold on a bit of a tear, of course. That's why oil and gold, but gold's dropped off a bit. But oil and natural gas. So we'll focus a little bit on energies today, and also on metals, and then the stock market, of course, as well. So before I start, we've got a couple of minutes to go, 1 minute actually. So I'd like to just say hello to everyone, and greetings to all of you. And there's a comment here from Arcis Trading over on Facebook. Bring your questions and put one up in the chat if you've got one, and I'll discuss it live with you at the end of this. So feel free to put up your question. And while I'm saying hello to everyone, welcome to all the new members too. There've been a lot of new members this week here on the tube, and also in our private group. So, and I think that's a result of us now offering a 14-day free trial in the private group. So there are links directly below this video, and for a limited amount of time, I'm offering 14 days free. Absolutely free. You can come have a look around, see what we do, see all my trade calls, decide whether they're good or bad or indifferent, and check out the analysis that we do there, and say hello to everyone, interact with everyone. And you don't need to stay. If you don't want to pay, you will have to put your credit card numbers in for details for security. But we will not charge you. You can be sure of that. And if you don't like it, you can simply leave. If you'd like to, you can carry on. We charge bi-weekly, so it's easier. And you can stop and start as you want. And if you get into trouble, you can simply restart, stay around for a couple of weeks, and pause, whatever you want to do. So it's very flexible. Links are below. Check it out. So having said all of that, welcome to everyone. There's a bit in Italian here from Paolo Atuti. I kind of recognize that. I don't know what it means, though. Good day to, difficult to pronounce, Barcus. Natural gas, of course, we'll be talking about that. Hello, Kiran and Ole. And all the usual faces. So greetings, and Paul and Tamer, of course. So welcome to everyone. And I'm going to go through these notes very quickly. And then once we've got through these notes, I'm going to try and rush through them and not take too much time. But I will put the transcript of these notes, the actual notes, with the links and all the stuff up in the private group. So private group members will get this copy. including the links from where I've taken the data, the source data. So I'm going to have a look at that right now. Let's get started. It's time to go. And let's get into Sunday Night Live, 15th of March, 2026. Just a reminder before I start, put your questions up and I will answer them at the end if we have time. And if I don't have time, it's a good idea for you to join the private group for 14 days for free, and you could ask your question in there instead. Let's start. So it's Sunday Night Live, 15th of March. We're going to look at stocks, bonds, commodities, crypto, FX, and of course, energies. I don't know why that's not there. So there are three things that we need to think about this week. Just three things, three major plays that are, or aspects of this market. First of all, a genuine US growth wobble. We saw very weak payrolls numbers and a soft retail sales number last week, just a few days ago. We also saw an oil shock due to the attacks on Iran and the potential or ongoing blockage of the Straits of Hormuz, and also the this deal that the US has made now. I saw it was in Trump's mind, I suppose, taking out the military sites on Karg Island and leaving the oil facilities exposed, and threatening that in case of blockage of the Straits of Hormuz. I don't think it's going to work. I don't think the Iranians are going to fall for that. And I think they've actually got the upper hand in this case. And we could see further upside pressure on oil if this is not resolved quite quickly. I don't think it's as desperate as everyone seems to think. Oil, I doubt. And I'm not saying it can't happen, but I doubt it's going to $200, $300, $400 a barrel. I think it's going back down to 50. But the timing of that is difficult to ponder upon, because we don't know what's going on with this war and what will happen with the Strait of Hormuz and Karg Island and the blackmail ransom deal that Trump's trying to make with the island versus the Straits. So an oil shock, that's the second thing. And that might not be resolved quickly, or it might be, I don't know. And then the longer structural background or backdrop of fiat dilution, we're seeing currencies dropping. We're seeing money getting printed, M2 money supply increasing, treasury buyback, and basically fiat currency dilution rushing into other assets. So it doesn't scream crash, but it means that it's messy, and the Fed has got a lot more in its hands to deal with. And of course, we've got a new Fed chairman coming in too. So the macro frame is sticky, slow growth, sticky inflation, what I did term a few weeks ago, if you remember. And I might be the first one that said it, and I think it's written on here now, slightly further down, this aspect of inflation increasing, but a recession at the same time. In other words, stagflation, no growth in the economy, but inflation nevertheless. Very, very difficult spot for any country to be in. Retail sales were down. We've talked about that. I'm not going to read through all of it. And I've highlighted this because I think this is actually really important. That's why this is no longer a neat and what we've been saying for about 2 or 3 years now. Bad news means potential rate cuts, and therefore maybe good for the markets. But that's been a bit of a cry for many months and years now, and I think that might be coming to an end. And the weak data points that we talked about, retail sales and jobs numbers, unemployment, all creeping the wrong way, starting to indicate that maybe these numbers aren't good for the market, not good for potential rate cuts. And stagflation means we may not get rate cuts, but we also might have a stagnant economy. There's the word, stagflation. So I was the first one who may have said that. Now, number two, we've got a new Fed chair coming in, of course, and we've got M2 increasing, treasury buybacks. In other words, what you might call quantitative easing and pumping money into the system. Let's just read down here. Underneath all of that, the long-term liquidity backdrop still supports the asset appreciation thesis. Asset appreciation, currency devaluation. In other words, stock market's up, gold up, Bitcoin up, potentially some of the commodities, oil and natural gas, everything basically up, and maybe even the dollar will hold its levels. So asset appreciation thesis is still in play. For those who think the stock markets are going down and that we're going into a recession or at least a strong market correction, keep this in mind. The longer-term liquidity backdrop still supports asset appreciation thesis. The M2 money supply, in other words, the amount of money in the system, rose to a record 22.4 trillion in January. That's last month, a couple of months ago, up from 22.3, just a tad up really, but it's still higher. And we're seeing cash buybacks by the Treasury. All right, so all of that is putting money into the system. And then we've talked about the oil war shock. We've talked about WTI and that pushing high. How high can it go? Can it go to 100? Can it go to 200? Can it go to 400? I don't think so, but it could go to 120. It could go to 150 or 160 suddenly and then crash down if there are weird things going on in the Straits and on Karg Island. I think that's the right word for it. Please correct me in the chat if I'm wrong. Karg, I think it's Kargh or something like that. So the right way to frame this war on your stream, that's what ChatGPT is talking to me. I actually don't agree. Maybe I don't agree with it. It's a major inflationary input. And of course, if oil stays bid, it tightens the noose around the Fed, supports defense and energy, and makes the soft growth narrative much harder for risk assets to enjoy. If oil calms down, a lot of the panic premium comes back super fast, super quickly. And these are all thoughts from various places like Reuters, for example. You can see some of the links that I put up here. And if you are in the private group, you can click on some of these links when I post the page up in the chat there, and you can read some of the articles. So oil and natural gas, I'll come back to that. I do want to talk about this, though, quickly, natural gas, because I think oil's pretty simple, really. If the Straits of Hormuz remain blocked, oil prices will remain high. If it gets worse, they'll go higher. If it gets better, they'll go lower. But there may be a bit of an aftershock residue, and we might see slightly higher oil prices for the foreseeable future, but not, I don't think, in the $100 to $200 range, but more likely maybe in the $50 to $80 range, something like that. And so we may have to adjust our levels for this next year or two slightly higher, or next year or 6 months, who knows, but slightly higher. Not the, what I thought $40 to $60 range might now be $60 to $80, for example. But let's talk about natural gas. That's oil. I think it's quite simple. Natural gas is a different one. It's not a war trading thing, not first at least, but there is an effect from war. And mainly, as always, natural gas is affected by weather, storage, and production, with the war adding a second order LNG and energy complex overlay. All right. So basically, and someone was saying, well, it's not going to affect America. It's not going to affect natural gas in the US. It's not going to affect WTI. It might affect Brent crude. It's not going to affect anything going on in the US. That'll affect everything in Europe. Not true. A rising tide lifts all ships, and any pressure on any market anywhere in the world has a secondary or knock-on effect, no matter where that product is sourced from. So if the US thinks that because they have mostly their own oil and gas, or all of it actually now, I think at this point, they produce it all themselves, that they won't be affected. Well, they have been, and you've seen WTI spike up to $100. But natural gas is different. And we've seen various things, but I want to actually focus, and the weather's been up and down and iffy. I could read through all of this, but it's not going to add any more help to you. But what might do is having a look at the COT report. And I'm going to just try and give you, and we'll go right across the COT report right now, and try and give you what the COT report is suggesting. That there is upside latent risk to natural gas. In other words, there's a risk that natural gas might go through a short squeeze and move quite suddenly higher. And if that does happen, funds must cover their shorts, the short squeeze. Other reportables must cover their shorts, a short squeeze, and commercials are already long and in length, and they will probably just add to that. That's a recipe for a violent nat gas squeeze. Commercial and swap dealers are already heavily long, whilst funds remain short. Positioning is primed for the squeeze. Right, so we'll come back to that. I'm going to look at the COT report shortly. The same with gold and silver. I'm going to have a quick look at the COT report, and then the rest of it I'll leave for those in the private group to read. Right, let's look at the COT report for natural gas. Now let's zoom in. I'm just going to make sure that you can all see me quite well, and that's all coming across okay. Can you all hear me fine? Let me know in the chat. Oil first, target the gap, says Emil. Can you all hear me? Just let me know if it's coming through clearly. I know I might be shouting a bit, but I think it's because I think that the microphone is, I think it's just a psychological thing. I think the microphone, we'll talk about silver shortly. CK, we'll talk about it in a minute. Kiran, nice to see you. Yeah, all good. Okay, thank you so much. I appreciate that. Wonderful, thank you. Let's get back to the charts. Now, this is the COT report for natural gas, and let's skim through it quickly because I really do want to get to the charts. I'm not going to even read through the blurb here. But first of all, you can see that we're at roughly at the average price for this time of the year. Let's look at the positioning of traders. Commercials, this is natural gas. So I'm going to look at gold as well on the COT report, and then we'll go straight across to the charts. Commercials, heavily, the natural gas, sorry, I'm thinking of gold. Commercials, long by 200,000 contracts, actually 160 long, and adding more to the short side, taking a wee bit off the long side, but still heavily long. Producers, long 278 and short 270. So, and adding a little bit more to the short side, quite a lot, 10,000. So balanced, but angling to the short side. Managed money, long 164, short 227. So managed money, angling a bit short, but taking quite a lot off the short side here, minus 16,000 and only minus 2.8 off the long side, and therefore swinging slightly long, if anything. We can even look at the chart shortly if you want to. And then non-commercials, maybe we'll have a look. Non-commercials, 207 long, 394 short, okay? Quite heavily short by 200,000 contracts. Swap dealers, you expect to be very long if the market's going down, which it is. And these are hedges, so they're long 200. Not a great deal, 150 net. And then other reportables, people like you and me, retail traders, etc., 43 long, very heavily short. So a lot of shorts on the retail side and quite a lot added to the short side on producers. Managed money, taking some of the short side off and swinging slightly long, maybe leaving the retail traders behind. But what it looks like is that there's a long or a buying under a bid under this market, and shown by the commercials, and that this market may be slowly swinging around to the long side as they accumulate, and potentially quite quickly if some of these names or traders get squeezed out. Managed money, for example, and some of the retail traders. So that's COT report on natural gas. Basically short, but if anything, very subject to or due for a short squeeze. I want to look at gold because gold is super interesting. We'll cover this on the charts in a minute. And once again, I just want to quickly scan through the COT report. Gold is obviously very, very high at the moment. And I've got a massive advert in the middle of the page, which I hate. Can we get rid of that? Let's go. How do we get to gold? Let's see. There we go. All right, commitment of traders. Now, this is gold. Long side, 85 long. This is commercials. Long side. This is, right, let's just check. Are we on gold? Yes, we're on gold. All right. Long side. And let's go back here. Long side, commercials, long side 85, not a great deal, and 288 to the short side, quite a lot. Very short commercials, and adding more to the short side. This is gold. Producers, 14,000 long, 34,000 short, and so very short. Managed money, 125 long, 26 short, adding more to the long side fractionally than the short side, but pretty equal, pretty balanced. Non-commercials, 215 versus 50 long. Swap dealers, the hedges, and then other reportables, 90 long, 25 short. So considering that these are retail traders mostly, that's a lot of long contracts and quite a lot of shorts, but not nearly as many as the longs. Look at that, 90,000 contracts, and commercials have 85. So there's a lot of short, a lot of long positions held by retail traders, more than the commercials. Very interesting. Commercials heavily short. So which way is gold going? Well, we'll have a look at the charts. Having said all of that, let's go to the charts. And I'm just going to do the old switcheroo here and just check that you can all still hear me. Yeah, all good. All right, so gold and everything we're going to get to right this minute. But first of all, I've got to switch screens. Stop that screen. And as you can see, the power has gone off again. And let's get the charts up here. But hopefully, with a bit of luck, the power situation is going to be resolved by tonight. I don't know if that's true or not, but we've had no power for 18 hours a day for 2 weeks here in South Africa, in Port Elizabeth. It's great, isn't it? Wonderful. Right, let's have a look at the charts. I'm going to start on the left-hand side here. I'm going to focus on the things that I said I would, and that would be metals and energies. But I do want to scan through a couple of the critical numbers here. We'll talk about stocks, of course, as well. But first of all, let's look at the dollar index. And the dollar index actually moved higher. I half expected it to do this. You know, once you've got a triple top like this, and we reapproach it with such vigor during an oil crisis and a missile war, adding strength to the dollar is not unusual. So we've now broken up above that high, and we formed a shaven head candle here on the daily chart, which means it's quite bullish. We've got up to that next kind of feathered level up here, the second line, the skinny one at the top. and just poke through it. Now, what I think might happen, and if this market is going to reverse, and if there is good news tonight and during the Asian and European sessions tomorrow, or something happens that releases traffic through the Straits of Hormuz, we could see everything absolutely reverse immediately. And the dollar, despite having a shaven head, could collapse back down. I really want to see how tomorrow plays out. I don't consider this as having closed properly above these highs just yet. And I want to see literally what tomorrow holds. If we carry on moving up, I'll hedge. I don't have a big position on here. Couple down there, which I hedged, and another one there. This is literally a 10% position. I was hoping to add more on the short, to get going down once we formed a sort of a double top here. Looked okay. It looked like we were going to move down. I did allow for a move back up to the top there, and we've done that fractionally higher. And let's see what happens now. I think that there's a chance, depending on, and it's really just a gamble, and it depends on politics and war and missiles, which missiles hit where, and what ships get through where in the straits and all that sort of thing. And, it's a gamble. It's a complete gamble. We have no clue. But these markets could reverse very quickly. I'm not going to look at all these individual stock names. You can pause the video and try and ascertain for yourself wherever you have positions on those. If you want to ask me about them, please do so. Now, I'm going to look at the NASDAQ and the S&P very quickly. Very disappointing last week. But we have still not broken down through this sort of triple bottom down here. We're right back at the bottom of this range and the green block, the point of control, and what I have called at this point until now a bull flag. There's the market move up, the Zweig breadth thrust, which took us out of the tariff collapse. That's what that was. And then we moved up. No one thought this was going to happen. No one, not even me. But I often get things wrong, so that's not surprising. But no one thought this was going to happen. Getting up to a new all-time high after February 2025 and just powering on up without stopping, and then entering this very broad, messy range as we enter this part of the Trump presidency where everything seems a little bit chaotic. A little bit would be an understatement. So there we go. We're in the range. We're at the bottom. This is the buying zone if you believe that this is a bull flag and this market's moving higher. If you believe that this is moving lower, then you should be not buying, of course, and looking to get short on a breakdown through here and a retrace back to the underside and look to ride this short. So that would be something like this, a down move, a retrace to the underside to say goodbye, and then down to the blob that I've got down there. And that would be the sort of target at the lower 200 period Bollinger Band and the top of the Zweig breadth thrust. And that's a very, very important level on this chart. That's why I'm going to put another black line right there. That's the top of the Zweig breadth thrust. The bottom of that range leading into the Zweig was down here. So maybe we need to look at this entire range between 20,500 and 22.1. So let's call it 20.1. It's a $2,000 range, big range, 10% range from 20 to 22. And I think that's where we'll end up going if this fails here. I don't know if it's going to fail or not. It could well do, or it might not. Now, what could prevent this from, let's make this red. What could prevent this from failing? Well, we might bounce out of here. We might hold the level. We're at the bottom of the bear flag. We've not defeated that spike low from earlier in the week, which is a very, very strong, powerful bounce out of there after making a fake low and breaking out of that fakeness back up again with a massive bullish candle. And we've not got back below there just yet. And we're still holding the bottom of this range. Now, it is a shaven bottom candle. In other words, there's no wick on this candle, which means that it's likely to continue tonight, in a few hours' time. It's when this next candle opens, it's likely to do something like what happened over here. Let's focus in on this. Exactly the same sort of thing, except this took one candle. This time it took two, so a little slower. And then the very next day, compare that candle to Friday's candle. The very next day, we moved lower, made a fake low, and engulfing candle bounced out and formed, got back into the range and provided more solidity and strength. And we've held there so far. We're still holding it. And we could do exactly the same thing today. If I cloned that candle there, this one in the middle, and stuck it onto where we are today, we could get something like this. I expect we will get a lower low when the market opens. We will move down because of the nature of this candle. It's a shaven bottom, very bearish. Momentum's likely to move down. So either that's going to happen, or we'll move down to the blob and all that stuff which I just talked about. We're also being held up by the 200-day moving average, which is right here. We're just fractionally below it, but we've been below it before, so no concern from there. And we might bounce out. And if we do bounce out, my path is much, much higher, and I think we could get right up into these sorts of levels up here. Make a note on your in your notebook, the 50% extension and the 61.8% extensions are at 25,800 and 30,000, call it. So either we're going to 30,000, I think, or we're going all the way back down to my blob at about 22,000, maybe even 20,000 if we get down to the bottom of that range that I talked about earlier, this range here, where the Zweig breadth thrust eventually broke out. So a very, very important level between 20 and 22. We're either going there, probably, or we're going to 30. So 20 or 30. Which one do you want? I like the 30. And I think most people do, although most people are not expecting that at this stage. All right, that's stocks. So that's all I'm going to say. And the S&P will do the same sort of thing, exactly like the NASDAQ. And all the names might do similar things. There'll be some that do better than others. We've got a few names on. And this is the S&P. Very similar. And we could have a similar sort of result into this. Sorry, that's the NASDAQ. That's why it looks very similar. S&P is not similar. It's not a bull flag. It's drooping. It's looking much more negative. And you can see I've already prepared mentally for this path down to the invalidation zone at 6,500 roughly. Is that 6.5? Yeah, 6,500. We're not far from there now. We're at 6,620. So it's only $100 down, and that would take us down to this bottom, double bottom level, and what I've called the invalidation zone. Notice that we're also at the 200-period moving average here on the NASDAQ, on the S&P, and we might have a similar thing. Bit of a spike down, clear out through that bottom, and back up again. All right, so that's stocks. Hang on one second. That's my alarm. Right, now let's go on to energies. While I've got loads of strength in me, let's talk about natural gas. I'm quickly going to switch back to have a look at the chat and see if everything is okay. Straits of Hormuz will be a meat grinder for a while. I'm long on oil and will remain so. It may well be, that might well be the case, Andrew, but it might not be as well. We don't know. Tesla, are you still bullish? Yeah, I'm still bullish on Tesla. But I want to talk about oil and gas now quickly. And if you've got more questions on stocks, we'll come back to that. Now, maybe let's start with oil, actually, because oil is the one that's been moving the most. And natural gas has been doing its thing, but not quite or nearly as vigorously. This is WTI oil. And a lot of people said oil, WTI, West Texas Intermediate crude oil, will not move up because it's made in America. And no problem at all. It's made in America, the prices stay low. Of course not. As I said earlier, rising tide lifts all ships, and stress in any market, in any part of the world, generally tends to affect the rest of the world, particularly in energies. As we all use energy, and we're all scrambling to get it from various friends and foes, depending on who you are. And so it's a messy old industry, that's for sure. Now, here is oil. This is the 4-hour chart. You can see I'm short from over here. I'm also short from much, much lower down, but safely tucked away and hedged. And I'll come back to that much later on, or just stop it out. I don't really mind. It's not a big position, and we could stop that out. It's a 50% position, actually, the one I'm talking about down there. This one's fully hedged. This one's a 50%. So yeah, a bit of stress here because we do have a hedge there and we have a hedge there, and we're now short over here. But I'm not convinced that the US will allow this to go up beyond $98 or potentially 104. That's the 786 fib. Look how we've broken out of this rising wedge. Let's zoom in. We retested. Let's go to the 1-hour chart. Actually, quite fascinating on the 1 hour. There's the rising wedge on the 1 hour. This is oil. We rose, and after having been up at $113, crashing down. And bear in mind, by the way, this weekly candle is massive. This is not going to be overcome or overdone very easily. Markets don't just do this and then recover and carry on moving up, without thinking about it. There's going to be a lot of messing around, and there's a long way to go before we get back up to the high at 113. I don't think we're going to get there personally, but I'm allowing for it, of course, because it's a massive war that's going on. I want to show you what this looks like on the 1 hour. And if you are trading on 1 hour charts, you'll enjoy this because it gives you a little bit of interesting structure to study and to analyze and shore up your technical analysis. There's the rising wedge, which is a bearish structure, and we normally get squeezed into the apex of the wedge. Notice in this case, it was also at the 50% Fibonacci retracement. We did get a little higher, not quite to the 618, but we certainly got to the 50 and then started to hesitate. Most markets will hesitate once they get to a 50% retracement level, no matter what. At least hesitate and very often continue in the original direction, which in this case is short if this market is to move down. I'm not saying it will. I'm saying that this is the normal technical sort of play of things. So we moved up to the top of the channel, this wedge, once, twice, 3 times, rejected each time, and then we fell down through the wedge as we got squeezed into the corner, and then did the mandatory bounce off the 20-period moving average, the mandatory retest into the underside of the wedge, and then we collapsed down through the 20. Now that was really, really good. And this had a chance until late on, well, not all that late, actually, sort of midday on Friday, we started to see things unravel in the straits again, and the oil price began to push up. But going back to the 4-hour chart, we're still underneath the wedge bottom, this rising trend line at the top, which we could probably redraw a little better now, and this rising trend line coming up from underneath. And we may have to test the 618 fib, which is this level here at 88. We may even have to get to 104. I think it's going to be really difficult to get above there, though, considering that it's really, really not in the interests of the current US administration and many of the projects that are going on in the US and the world economy in general, looking a little bit shaky, as we spoke about retail sales and jobs pretty iffy last week, and a massive increase in the price of gasoline, energy, oil in general. The whole complex is not what everyone wants at all, particularly with midterms and the US, the whole story there. I don't even know what to say about the US anymore, but the whole thing, you know what I'm talking about. I don't think it's going to be very easy for this to get out of control. And I think all stops will be, if possible, pulled out to prevent it. So I'm going to remain short here unless we close above the 618 fib. This is my strategy for now. It may change. The 618 fib's at 98,000. I like 98s, and I like the 8s and the 2s in general. 98 is a good number. 102 is a good number. So if we get to 98 and turn around, that would be great. I'll add some more shorts on. We've got 2 small short positions here, and I'd like to add some more on and get shorter. But if we don't do that and we keep moving higher, I'll hedge these last 2 positions, aim for 104 and see what happens at 104. If we get to 104 and carry on pushing up to 112, which I think is pretty unlikely, but it's possible. And when I say unlikely, I mean the way things currently are. Anything can change at any moment. That's the nature of war. And, this could just go haywire, up or down at any moment. We don't know. So I'm keeping a very close eye on it. And the moment we close above there, I will hedge early, not late, and expect this to go up to 104. If we, go up through that high up here, spike up through it, and then reverse without getting to 104, I might have to take a small loss on the hedge. I don't know. We'll play it by ear, but we'll all find out in a few hours' time how this market's going to open. So we talked about natural gas and oil. We talked about oil. Let's talk about natural gas. We talked about some of the other things. Now, natural gas is interesting as well. I think we've got a rounding bottom here, and we talked about the COT report just a few minutes ago, saying that commercials, the whole underswell of this market, is sort of positioned basically long with a bit of a bid under it. We don't have the weather support, and we've got this war going on with missile strikes and the straits being blocked and quite a lot of LNG being disrupted because of it. And that's put a bit of a bid under natural gas. I'm worried that this bid under natural gas is only because of the war, and that without the war, we would be much lower. That's possible too. But when you look at the COT report, the commercials are very long. Producers are getting along. And the only ones that are short now are the retail traders and some of the managed money, and they might have to be squeezed out. So I'm going to remain bullish. I've got a few very small short positions here, not enough yet. I'd like to get some more on, long positions rather. Did I say short? But notice where we are on this 4-hour chart. Then we go to the day chart. This is the 4-hour chart. There's the 50-period moving average that we're resting on. Once again, stuck between the 50 and the 20-period moving average, the green one. The 200 is still above us. So we're below the longest moving average, the 200, and we're below the shortest term moving average, the 20, which means it's pretty bearish, but we are resting on the 50, and we're still above this level here down at the bottom. Now, I don't know how this is going to happen. I suspect, actually, we've got a fairly good chance of this gapping up simply because of war and worries about the Straits. It could gap up simply because of that. I don't know what the weather's going to be like. We could look at natural gas weather. It didn't look like it gave us much info there, so I'm not going to delve into it too much, but not a lot of visibility of, of any major weather changes going forward, perhaps later on in the week or early the following week, the way I read things. I'm no weather expert either. So let's ignore the weather aspect for now. Storage was sort of, I think it was 38,000. So, it wasn't great, not very bullish, but we have this war going on and we have a rounded technical bottom on this chart. We've also got some gaps that still have not been filled, particularly this one up here in the center of your screen right now, this very large gap with the bottom at 375 and the top at 425. There we go, 375 and 425 there and there. And those are two very key levels on the natural gas chart always, 375 being the most important. 425 is an important number too. And so I think we might be aiming for, we have not closed that gap yet, and we've got this rounded bottom, which is looking quite nice. We've made some progress, very zigzaggy, sure. Lots of ups and, 2 steps up, 1.5 steps back down, 2 steps up, 1.5 back down. But we are making progress and we have higher highs and higher lows, or at least higher lows, one higher high. We've not got a new higher high yet. But if we can get above that high and into this order block and up to 375, I'll be happy with this contract, and that'll do me for this contract. I try to get one good trade, maybe two if I'm lucky, per contract. And so I try to wait for the best opportunity to either get long or short on a contract. We've got about 28 days to trade it, or 27 days really, in order to be safe between the rolls. And so in those, let's call it 25 days, in those 25, and that's take off another 4, it's basically 20 trading days, if that, maybe 19. So in those 19 trading days, I try to find one good trade, and I'm hoping that this is the one that will just get to 375 and I can get out of this trade for about a 70 to 75 cent profit. And then we'll go to the next contract, can start planning for the next contract, start looking at the forward tape, start looking at weather, start looking at industrial demand, production, all that sort of thing, start looking at seasonal variations, weather changes that come along, that heating demand, cooling demand, and then of course this war and what might happen there. So generally I'm bullish. I think we might gap up, but if we don't gap up and we move down instead below the 50, below that level, I'll just simply hedge and see what happens next. I have got no real clear levels below us, apart from this green line that I drew in some time back, thinking that we would get lower before moving higher. And actually we didn't, we moved higher. Maybe we've got to get lower next, back down to the bottom, and maybe, just maybe, I don't know, maybe we've got to do this next. And we still haven't got down to the bottom properly yet. We might form a double bottom there at around about 2.7, something like that, and then bounce out of there and then back to 375, my target. So it's either that or that, but ultimately my target is 375 and then 425. I'm hoping that we won't have to take an excursion downwards first and that we'll bounce out instead and move up. So that's oil and gas. And if you look at Brent crude, it did a lot worse than natural gas, particularly on Friday. And we've moved up to the 618 fib on Brent crude. So, and we moved up all the way to about the same, $113. So not a much higher high, but on this rebound over the last couple of days, and with what has started to go wrong again in the Strait, we saw WTI faring a lot worse than Brent crude. We saw Brent crude faring a lot worse than WTI, getting up to the 618 fib, whereas WTI only just got it slightly above the 50. So yeah, a bit of a difference there. Now, what have we talked about? Have we talked about gold and silver and metals and so on? I can't remember now. Have we? What do we need to talk about next? Throw me a bone there, folks. Yeah, I meant WTI, we vibe. Sorry, I got them mixed up. I meant Brent crude was the one that has been a little bit more under pressure than WTI. All right. Yeah, light crude. It's a different type of oil as well. That's a very good point. Of course, they all get affected together, but yes, very important point. Light crude. I'm not an expert in the variations in heavy and light crude and Brent crude and all. and it's not really my forte, studying oil fields and the different types of oil, sour oil, and all sorts of things. I don't know. I can't discuss that. I'd love to, and maybe I should do some work on that. All right, now, folks, have we talked about oil? And I mean, have we talked about metals? I seem to have lost track. I can't remember. We did talk about the dollar. We haven't talked about Bitcoin. Have we talked about metals? I'm not sure now. Actually, I've completely forgotten. Can you believe it? Let me know what we've still got to cover, folks. While we're doing that, let me know about the metals. While we're doing that, I want to talk about Bitcoin. I think we just covered stocks, actually. Now, Bitcoin is super, super interesting. I'm going to show you two charts here on Bitcoin. Bitcoin is about the only asset that's done quite well, despite everything that happened last week. Look at Bitcoin. Just look at the last 5 days or week. 1, 2, 3, 4, 5, 6, 7 bullish days. This is the day chart, yeah, on Bitcoin. 1, 2, 3, 4, 5, 6, 7 bullish days on Bitcoin. Maybe not Thursday because there was an inside day, and we did have a slightly lower low. But every other day has either had a higher high or a higher low. And if you compare that directly, for example, to the Nasdaq, let's quickly look at that, or the S&P, or any other index if you want. The last 5 days have been down. 1, 2, 3. Okay, last 4 days, that one was bullish, but 4 days down, and Bitcoin has had 4 days up. So Bitcoin's done particularly well, and I rather like the way this is playing. And I estimate that rather than having very bad news out of the Strait of Hormuz tonight and later on, we might actually have a little bit of good news. I don't know. But the way Bitcoin is behaving, and considering it's the only market that's open right now, on open exchange at least, and it's moving and holding and moving, it's not moving down, it's doing quite well. And that was Friday, had a big surge up with a massive spike, forming a double top. Very concerning for that. But, Saturday, Sunday, holding up. The market's open. And if we look at this on the Bitcoin futures chart, even though we had that massive spike up to the double top there, we've got into the empty zone, and I think we've done it. I think we double top there because it was a double top. That's all. We closed the gap, double topped it, but we've held that level on the spot price, and in fact moved slightly higher. And we're now into the empty zone, and I think we're going to go all the way up to about 80 or 81 to the top or bottom of the CME gap. And with a bit of momentum, if we get it, I think it's going to be difficult to get further than that. I'll show you why. We could get up to about 84 and the underside of the volume zone in the green block here, and you can see the volume on the right-hand side. But if we look at the spot price, I'll tell you why I think we might struggle to get through that 80-ish level is because that trend line coming down and the 100-period moving average here on the chart is exactly, if we moved up there right now today, at 80,000 and a half, 80,245 to be precise. So yeah, I'm still bullish on Bitcoin. And I think despite this spike high up into what looks like a double top, the fact that we've held really well this weekend compared to other weekends where we've spiked up on a Friday, dribbled down on Saturday, dribbled on Sunday, just dribbling, and then Monday or late on Sunday, we get the massive collapse. Instead of dribbling down, we've actually dribbled up on this occasion. And despite what's going on in Iran, which is pretty interesting, I think. So I'm long on Bitcoin, Ethereum, XRP, and Solana, and a couple of other names here and there. Not much on the alts right now, but I'm sticking to my Bitcoin. And I think we can get up to 80. I'll probably be looking to hedge at about 80 or 81. As I said, at the underside of that trend line, around about the 100-period moving average, 80, 81. With a bit of luck, we could push up into the next level at 84. And that's this volume node here. And well, not quite that high, the underside of this ledge. And once again, if you look at the futures chart, you can see why I think that, because the empty zone is not going to provide much resistance as we move up. There's almost no volume, and there's zero volume in the CME gap. That's why we've got to go back there. And it looks like we're trying to head up. Yes, we have a double spike high, double top here on the day chart, which is not great. And it's going to be a concern. There it is there on the 4-hour chart on the futures. Big rejection there. But if we go to the 4-hour chart on the spot price, it doesn't look too bad at all. In fact, there's the big rejection, but we're just bouncing off the 20-period moving average here on the 4-hour chart and moving out of that point of control. That volume zone has provided support, and Bitcoin is now trying to head back up again. And I think we've got a chance of this moving higher rather than lower, up to about 80, and with a massive amount of luck, up to 84, 85. So that's Bitcoin. Now, I think we didn't cover metals, so we'll go straight into that. Maybe we did, or maybe we didn't. No one's helping me out here. Have we talked about gold? We haven't. Okay, thank you. Thank you. I didn't read up slightly higher above. All right, let's go on to gold and silver. Now, I did say I would look at the COT report. So I'm not sure we got to that, but I'm going to quickly remind you of what I read out to you on the gold. We did look at it together, actually. I'll remind you what I just read out. In that, commercials are now heavily short on gold. 288,000 contracts short and only 85,000 long. So lots of short groundswell there, and producers angling short, managed money very long, and other reportables, people like you and me, very long. And so we've got the groundswell angling to the short side, and the speculators, traders, gamblers, bettors angled to the long side. Groundswell going short, gamblers going long. What do you think is going to happen next? I think it's going short. So I'm almost certain. In fact, it's moving down as I speak. Not right now, but it did on Friday. And this is the 4-hour chart. We got short on the breakdown, and we're moving down. We did try and get long before that at the trend line bounce. We bounced out of that. Let's just zoom in here. There's the 4-hour candle where I try to get long. We bounced off the 100, the 20, and the trend line quite beautifully on the 4-hour chart here. And it looked like we were going to try and move up. We did not. We did try, actually. We actually closed above all of those moving averages and the trend line at one point. This candle here, the very next candle reversed it entirely with a railroad twin track reversal candle, and we've moved down ever since. We got short, got hedged, got rid of that long position, got out of it, hedged it very, very quickly, actually, the moment we started moving down. We may have locked in even a slight amount of profit there, I can't remember. But, and now we're moving down. We got short on the breakdown. We're below the trend line, below the 20, this is the day chart, below the 20-period moving average, below that level there, below the point of control, below everything, and we're now moving down. And I think we've got a chance at least, I think we're going to go down to the 50-period moving average here, the red line, and this red line across the page. And I think we could get back down to the next Fibonacci level and this swing low. And I think it's highly likely we'll actually get all the way down to 4,850, this swing low here. And with a bit of luck, we could get even lower, down to about 4,300 and something, right? That's the second triangle breakout over there. The ascending triangle breakout level would be a great place to get back to. We have not retested it yet, although that big spike down came pretty close. And then there's another ascending triangle breakout much, much further down at about 3,500, where we got long originally. You can see my first long position into this big, massive move, and we got most of this profit. We got long there, we got long there. We did try and get short, but reversed again back to long. And now we're looking to the short side, having tried once or twice, taking a few quick trades on the long side, a little bit of profit on the longs, a little bit of profit on the short. We tried another long. That one got hedged because it didn't work out. And we've now gone short, looking for a move at best, I think, down to the top of this ascending triangle breakout, about 4,380. So that gold, fully short. And if we keep moving down with some vigor, I'll add some more to that. Now, silver, I'm still hedged, but if gold moves down, I think silver will too. And I'm looking for silver to get down here so that I can exit my hedge, take profit on the short side. I have a short and a long on silver. They're a little bit too far apart for me to unhedge right now. So I'd like to get down to an extreme level, the 200-period moving average here on this day chart on silver, and this horizontal breakout level from the double top over there, which is the same time when gold broke out of its ascending triangle. This is also an ascending triangle of some sort. In fact, we can draw that in there if we have the inclination. I don't think we're going to. Let's quickly draw that in. So another little ascending triangle here, something like that, right? And that one is where I think we could come back to, much like gold at its highest ascending triangle. Not the best drawn triangle, sorry about that, but something like that. So I think we can come back down to the 200-period moving average, the top of the breakout triangle, double top ascending triangle, and that's all the way down to 55. But I think if we do get that low, I would not be. Also notice at the top of this channel, which we were trading in for a little bit of time. So it's the top of that channel too. But I think if we do get that low, it's probably likely we're going to have to scare a few people out and get down to that point of control a little bit lower down, and maybe closer to 50. Maybe not that low, but closer to 50. So something like that, just poking through there and creating a little bit of a scare. So something like that on silver. I am now hedged on silver. I don't have a position, not long or short. I've got a long and a short. So I'm not directionally biased at the moment, but I would like to get out of my shorts down here and add to the long side. I don't want to unhedge at the moment because my hedges are too far apart. So that's a matter of waiting. And then copper, I got long on copper. So we're in the right direction on gold, at least. That's moving down and we're short. Silver, I'm hedged, makes no difference at the moment. But copper, I'm also long on copper, and this is moving down too. And of course, with retail sales and jobs looking weak, industrial production perhaps to follow, demand for oil, gas, energy, copper, all that sort of thing, perhaps going to drop down a bit. The war might come to an end. I think there's going to be a lot of replenishment of ammo and supplies, so that might keep a bit under copper. And of course, copper is used in just about everything else as well, but it's moving down. Now we have a head and shoulders pattern here. There's the shoulder, left-hand shoulder. Should draw it out, I suppose. Not going to. Don't have time. There's the left-hand shoulder. There's the head. There's the right-hand shoulder. My contention was that we would hold this level, bounce out, and move higher, as copper is more likely to move up than the other than the precious metals because of demand, purely because of demand for military and electrical. Let's make this green. So that's what I think might happen, but I don't know. I don't know. That's meant to be an arrow anyway. Why is that not an arrow? That's weird. So I don't know if this is going to happen. Something like this. Oh, I know why. Just bear with me 1 second. Okay, I got rid of the arrow tip. Anyway, that's what I think could happen. But now they're moving down. We've moved down quite fast. And Friday's candle wasn't a good candle. It's very bearish. Not much of a lower wick, and right into that line, the 100-period moving average. And it looks to me like it's going to try and move down. So my strategy is to hedge this position. And if we move down and break down through here, down through the 100, I'll try and sort of get out of the hedge, maybe immediately on the breakthrough initially or on the retrace, depending on how I think this looks. The retrace gives me a bit of time to observe it before making a rash decision, and then a move down into lower levels. And potentially, we could get back down to the trend line down here before bouncing out, all the way back down to $4.80 something. Or we could get back down to $5 or $5.25, the big rounds and the quarter rounds. But there is every danger that if there is a bit of stupor in manufacturing and industry, that natural gas could actually, copper could actually follow along with it. And natural gas too, by the way. Natural gas is equally affected by industrial demand, production, and all that sort of thing. Much like copper, you could call it Dr. Nat Gas and Dr. Copper. So copper might do the same thing. Copper might move down. I'm hoping it'll hold here, but if it does move down, I'll just simply hedge it. It's not a big position again, and see if we can get back down to this cluster here. And I'll be able to adjust that hedge there too, and decide what to do. I think this is going to be okay. I'm not worried about this. We've got a large channel that copper's trading in, and at the very worst, I think we'll get back down to the bottom of the channel and bounce out of there, something like that. All right. But I don't think so. I think we'll probably only, if at most, probably get back down there, and maybe only back down to the 200-day moving average and the black line over here. And that would mean that we only drop down to, let's zoom in, that would mean that copper only drops from here, although it will drop and stop us out or hedge us, will drop down to about $5.50, 48, something like that, before bouncing out. But I think it's more likely we'll get down here, down to the 200, something like that. And by then we'll be long hedge. We'll be able to take profit on the short side if it bounces, and then add some more longs at that point. And then hopefully we'll get copper moving back up again. So that's copper. And we've talked about gold and silver. Let's make this one green too. And I think basically we've covered all the metals now. Platinum, I'm not trading. I don't have a position on there. I'm not interested in that at the moment, but it looks like it might move down too. And actually, this looks more bearish than copper, to be honest. And we're at the 100. There's the 200 on platinum. And there's also a ledge and a point of control just below there. So platinum could reach quite easily and quite nicely. And it's a very spiky sort of instrument to trade. So don't be prepared for this to spike all over the show. It often does. So there are two targets for your shorts on platinum if you are going short. And if you're going long, just be careful. We are about to break the 100-period moving average by the looks of it. And we have a shaven bottom candle approaching very vigorously and right at these two previous lows. And that swing low. So that pattern, no positions on there, but I think it's going short. And folks, I think that's everything for today. Just on this last page, dollar, South African rand, for those who are trading it. We've been long, we got out. I think we're going to see what happens over here. If we can push up through that level, I think the rand should be weaker against the US dollar, much weaker, to be honest. And I think we can push up through this level. It'll give us another chance to rebuy because we're now out of this trade, and to get long again, perhaps on a retrace or something like that. Something like this, maybe not quite as vigorous a bounce, and try and get long on the rand against the dollar again. So we're out of the trade. We got long there. We're out now. We took profit at the top, and we're out of that trade, but we might try and get back in. And then Bitcoin gold, looking great, by the way. Another feather in the cap of Bitcoin, making a fractionally higher high on Bitcoin versus gold. So we now have a weekly chart with a weekly bullish reversal candle, an inverse hammer, followed up by a bullish week with a higher high and a higher high and a higher low compared to the previous week. So pretty bullish on Bitcoin gold, and that supports my Bitcoin thesis that I was talking about earlier, that Bitcoin, now it's drooping down as I talk, but Bitcoin generally is doing particularly well compared to the other risk assets, even within the maelstrom of missiles in the Middle East. Folks, I don't think we're going to get too many questions today. I'm running out of vocal strength. The DAX, yeah. Oh, yeah. Let's talk about the DAX quickly. I did have a position on the DAX. I do have a position on the DAX. I've added a new one actually. We were long on the DAX. So this is what I think on the DAX, right? We had this range that we traded within for so long. Actually, this was the Zweig breadth thrust that we saw in the US indices. Same thing happened here, but the German 40 didn't carry on like the Nasdaq and the S&P. Once we got above the breakout level of the Zweig breadth thrust zone, we simply ranged, and that took from May 2025, and we only broke out of that range in January 2026. So 7 months we were stuck here, whilst the Nasdaq and the S&P carried on moving up, doing much, much better than the European equities and indices. We then broke up, and we've now broken up through that top. We held it pretty well on the retrace. We got long on the retrace bounce over there, just a small position. I was a bit wary of this, and we had some reason to worry about this moving down for a correction, probably back down to the support line. So I took a very tiny position here, and we moved down, crashed down through the invalidation zone only for a fraction of time, bounced back up again, and I added my next small long position on the bounce out of the invalidation zone. So I have a long from over there and a long from over there, only tiny, 5% each. So, minuscule. Maybe shouldn't even be bothered with them, but there you go. I want to be in this market. And I think, much like the Nasdaq and the S&P, we've got some headwinds now, which are not just this idea of good news is bad news for the stock markets and for rate cuts. I think we're now seeing that bad news is good news. Did I say good is bad? Bad news was considered good news because we might get all this stuff happened after COVID. But now I think bad news is potentially becoming bad news. And these markets are showing it. Look at the German 30, not looking good, not good at all. And like all of them, like the S&P and Nasdaq, etc., I'll have to hedge if these move down below the invalidation zones. The RSI is oversold, so that's something at least. We might get a bit of a bounce because of that. And if we look at the Nasdaq, the RSI is not oversold, nor is the S&P RSI oversold. So those could move down lower. So in summary, folks, I still think there's a chance that the indices will bounce out, although they're very precarious. There's a lot of danger going on in the world right now, a lot of political problems, a lot of massive problems, which might or might not be resolved quickly or slowly. I have no clue. I'm not a war analyst. Don't know anything about war. I hate war. I hate everything to do with it. I don't want to know about it really, but I do want to know how it might affect the markets. So anything that happens in this strait and on Carg Island this weekend, tonight, tomorrow, and during this week is going to be a deciding factor, I think, on these markets, not just the energy markets, but things like gold and silver, which might catch a bid because of it. Although they're looking weak right now, gold and silver not looking strong, but they might just suddenly turn around and bounce out of here. I'm short on them, I hope not. And then Bitcoin might just not carry on with its business going upwards as it's doing quite well right now. And stocks, NASDAQ, indices like NASDAQ, S&P, German 30, all right at their very lows at the moment, at the invalidation levels. And anything could just push them through and set this market off on a major correction. So be super careful. Don't oversize and be gentle on your account. Remember, NASDAQ and S&P are right at those points. And they both ended up with shaven bottom candles on Friday, which means they're likely to carry on moving down tonight. But I'm hoping just a quick spike. And let me remind you of what happened, what I'm referring to. This sort of thing here in the middle of the page. I'm hoping for a spike down. I think we will move down tonight when the market opens. Could move down by 100 points. We could move down from 24,300, roughly where we are right now, down to 24,100, or even lower, down to 24,000, and then bounce right back up again like we did over there. So be aware of that. Don't be spooked out by the initial move, and wait for, if you can. And I know some of you might have accounts that are under stress, that you haven't got the margin, and you're worried about your accounts, and you're in gas and oil and gold and silver and stocks, and everything's just a mess because of this war. You don't know quite what's going on. Try to reduce size. I've been advising my private group members this entire week. Try to reduce size. Don't over leverage. Don't use leverage at all if you can help it right now. Try to just trade your account capital as you have it. It's not advice. It's just, if you want to reduce size, reduce it back down to 1-to-1 leverage, so that in order for you to lose your account, the markets would all have to go to zero. That's what it would take. And that's not going to happen. So your account is safe if you're not leveraged. All right. Keep that in mind. These markets will spike down probably tonight, especially S&P, NASDAQ, and the German 30, and then potentially bounce right back up again within a few hours and start moving higher. Don't get trapped to the short side. Don't hold your shorts if it starts bouncing out of there. Don't get short and then bag hold the shorts. That'll be the worst possible thing if this market bounces out. If it keeps moving down, good on you. You've done well. You'll be in the right direction. Folks, I hope you enjoyed everything. Remember, we've got a 14-day free trial going on right now. The links are below here, and you can come and join. 14 days, absolutely free. Come and say hello, join us, get to know us, watch all of my trades and watch all of my analyses, meet some new people, and learn some new things. That's the whole point of this private group. And I hope to see you there soon. Take care. Have a wonderful evening. And before I go, I'm going to give away a few free memberships if I can. And I'm not quite sure if I can, but I'm going to try. Membership gifting. Bear with me. Buy membership for viewers. Here we go. Folks, I'm sending out 5 free memberships to everyone that's present. Only if you're subscribed will you get one. I might be able to send another 5 actually. And let's see if I can send another 5. You have to be subscribed. I don't allocate them. YouTube does that. So if you got one, good on you. It wasn't me who gave it to you. It was YouTube. And I think I can send another 5 right now. Let's do it. Why not? It's kind of fun, isn't it? So here come another 5, folks. Another 5 free memberships, and enjoy it. Hope you enjoyed the video. I'll see you next time. Make sure to join me on Monday for my recorded video on natural gas. We're going over natural gas again on Monday after we've seen how these markets open tonight and what the reaction is to what's going on in Iran and the weather and all the stuff, and whether we gap up or gap down. We'll find out all that tonight, and watch out for my analysis in Monday's natural gas video, which will come out tomorrow. Take care. It's been great having you. Thanks for joining me here on a Sunday night. Very, very special that you make the effort, and I appreciate it very much. See you later. Ciao. I'm trying to find the button. I've got an outro video for you to watch. Watch this video. See you later. Hi there, I'm James. I'm the founder of ArcisFX. I'd like to personally invite you to join our 24/7 trading group. This is built for traders who want an edge. Inside, you'll get access to live calls on Forex, commodities, crypto, energies, and metals, along with exclusive daily analysis designed to unlock your trading potential. And this in both traditional and now in digital markets. I'm talking Bitcoin, crypto, altcoins, and tethered currencies. You'll gain early access to insider news, real-time updates, real-time support, and premium educational content. If you want to sharpen your skills and boost your success rate, then join me and Paul in this community. This is a fast-growing community of traders who are now writing their own success stories. So don't wait. Join up now. Your edge starts right here.